Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Darrell Fletcher. We're going to be talking commodities, how he is viewing energy commodities, some of the base metals from more of a hedging, trading perspective, as Darrell is the managing director of commodities at Bannockburn Global Forex and Bannockburn Capital Markets. Darrell is setting up the commodities trading desk at that organization, so I always find it interesting to get his take on what he's seeing in the commodities markets and what hedging he is seeing. Darrell, we're going to start with more of that general picture on commodities when it comes to hedge fund positioning. I think we brought it up a couple weeks ago, but the big headline was hedge funds have gotten short in commodities. And this is the shortest they have been since 2011. And actually, quite frankly, besides a quick little blip in 2016, hedge funds have been long commodities mostly. Now they are in, again, the short position that we haven't seen since 2011. What's your takeaway from this sort of action from the hedge fund?
Yeah, hey Corey, thanks for having me again. Yeah, that chart caught my eye back in mid-August when the money managed type positions went net short, the lowest since 2011. You're right, there was one other tick negative, but it wasn't as steep as this was back in 2016, and that was not long-lived either. My guess is, well, I haven't seen the latest numbers, but we've had a bit of flow back into base metals in the past few weeks. That was from August 9th, I think. So yeah, I mean, I think it was just a reflection of not wanting to be long for where we've been with energy supplies higher across. And I mean, you look at that positioning, it's very macro, and then it takes into account 20 commodities, including agriculture, which is also very high supply, the grain side across the world. And then you couple that with this just Chinese demand, the lack of import, the numbers continue to get lower, whether it's copper, whether it's crude oil imports. That demand is just not there. This is a long-standing story this year with Chinese demand. So I think that hedge fund type positioning just said, hey, we're going to flatten out. We'll see how long this lasts. Again, I think in the past couple of weeks, we've had a really nice move in base metals. And I think that is some fun positioning coming back in.
Now, does this have potentially anything to do with people now looking at a U.S. recession coming early next year, or sometime in at least the relatively near term?
I don't. I think in the Powell speech last week, kind of confirming that we're going to have an interest rate cut. Obviously, Bank of Canada has been. I think that is not, maybe it's part of the picture, but I think the bigger picture is just this oversupply of energy. We're seeing some really weak, I think, weak price action in crude oil, oversupply in the ag space, grains, and this Chinese demand. And I think from a speculative position, you're like, hey, we're going to flatten out and then see. Maybe this is kind of going to base things out here and we build from here, but it's relatively neutral. And if you start to look at, like if you said, hey, what did the month look like since we last talked? I'd say it's kind of mixed and neutral. Base metals, I look at the LMEX index month to date, it's up about 5%. Gold, I know you guys follow that really closely with a lot of your interviews there. Gold's been strong again, another about 5%, I think, on the month. Copper, similar, it's had a nice bounce off of four. Like we saw that, and it's up about 3% on the month. But then the energy index is down, flattish to down, maybe down 2%. So no big moves this month, but yeah, that did catch my eye, that net speculative type positioning hitting that low since 2011. That's pretty big.
Now, I find this interesting because, yes, while outside of gold, a lot of these commodities are not at all-time highs, but it does seem like a lot of these commodities have been, in a way, repriced after the pandemic. Crude still holding up in that 70 to 80 region, copper over $4. So is this really hedge funds thinking that prices almost need to correct back to pre-pandemic levels, or could we be in this new pricing environment where inflation has also just pushed up the base level for commodities?
Yeah, I think it's more the latter. And I could see us kind of basing out here across the board. But again, you go back to where we were there, like end of July into early August, and you're just seeing pretty good energy supply globally. Ags, everything's in pretty good shape. And then the Chinese demand, again, I think it was just let's get neutral and see where we go from here. Plus, we were waiting for, get a little better direction from the Fed here in the US, and we did. So It'll be interesting. You can move into a crude oil. I've been watching a little closer the past couple weeks. The price action looks a little weak to me. We're starting to get some lower highs and even some lower lows. If you look back at the past two moves, and this week so far has been an interesting example because we had the nice pop on Friday with general risk on across the board after the Powell speech, and then some geopolitical events Sunday night, Monday. We had a big move up in crude. Again, today off $2. It just doesn't seem to have a lot of stamina here to try and make a move back towards 80. We're still in the 70-90 range WTI basis that we've been in for a long time, but the price action looks a little weak. Again, some mixed signals. The balances from a supply and demand globally are starting to look weaker when we get into 1Q, where we're going to have probably an excess in daily supply. That's 1Q 25, and then that's getting pretty consistent across various analysts that are looking at this. The next really interesting point, I think, is going to be the OPEC. They have a monthly report, and we'll have comments, I'm sure. I think it's early September, like the 10th or 11th. When they have these cuts, they're talking about unwinding the cuts, potentially put more crude back on the market starting fourth quarter. But I think I could very well see them pushing that out, or unless they are wanting to kind of push back towards the shale type producers. That's going to be interesting to see what they do in mid September, early September, if they will indeed unwind those cuts as they said they would, or they're going to push that out to Jan 25, like a first quarter. Some of the mixed signals are OECD storage is a little lower than the 10-year, and US storage is a little lower than the 10-year, but it's kind of mixed. I think that watching the actual technical price action is going to be interesting, and then what OPEC may or may not do differently come early September.
So what are you seeing on the commodities trading desk side of things? Is there more interest in natural gas? Are people trying to hedge at these higher prices? Any insights that you can share with us?
Yeah, natural gas is a little bit different. On the crude side, we'll be watching like diesel and gasoline, so some of those forward strips for the consumer consumption side, and those are getting attractive. We're seeing some interest in those levels because they're back kind of below the averages for like if you want to look at a 5-year type average. Now on natural gas, the price action is really weak. Again, the NYMEX Henry Hub here, September contract comes off the board tomorrow. We dip down below two, and it's holding well below two now. So we've got a September expiration. The winter strip here for Henry Hub is at $3. It might have fallen below three this morning. I mean, that's low for winter gas. Again, strong production and our storage numbers, I'll get into that in a second, are really strong globally. Even though it's hot, I think it's probably hot out there too in Western Canada, but it's been really hot here. So we should get some Rescom power type demand draw this week, but the markets this week has been really weak. This fall back below $2.
So I guess to wrap up the energy comments, when it comes to crude or natural gas, we might be seeing lower prices, hey?
Yeah, I think for the time being, natural gas is always does this, and then once we start to get some cold spells, it'll pop back up. But I mean, if you're on the here, what we are seeing price action wise is this. We have a really steeply contangoed natural gas curve with, okay, fronts are two, sub two. You go out to 25, you're three and a quarter. These are all Henry Hub. And then the backs kind of basically start to flatten out around 27. You peak and actually goes a little bit backwardated into Cal 30. I know there's been good producer selling out that curve to grab those type numbers, which is telling. And in the front, you've got great opportunity for those who aren't hedged in the short term. You grab winter gas at $3. I mean, you can get Cal 24 it's sub 240 today. That's if you're on the buy side and you're locking up with profitability and your consumption for next year, you really can't go wrong there if you don't have it hedged already.
Let's move into copper, the base metals in general, then, because copper has gotten a nice little rebound. It's back above $4, but also still well off those highs of around 520 back in May. However, this $4 number, I think, is more of a psychological number, but those can be important. If copper can hold above $4, could bring in some more interest from investors. What are you seeing on the trading desk side?
Yeah, completely agree. I think we hit a 6-week high today. There's a little bit of noise because there was a London holiday yesterday, so LME's playing a little catch up, but the LME base metal complex is having a really good day here. It already just closed. I think we hit a 6 week high. You're exactly right. Four was holding in there for a week or two, but it never really broke sharply down below it, and it bounced pretty nice here in the past couple of weeks. The lower interest rate confirmation here in the U.S., I think, helped a lot. You really saw that in the base metals on Friday. Got some decent contango. The market's still upward sloping. And it's impressive what base metals have done given iron ore sub $100 and HRC steel, you're down 40% of the year. So the base metals have kind of pulled themselves away from the whole metal complex. The gold's a whole other story with what it's done this year. But yeah, I agree. I'd say when we look at the hedge fund type money management numbers, I would tend to bet that there's been some positioning coming back into this off of the four. It didn't clear down below four. So I'm going to say, okay, we're probably starting to reload here. And I think that the contango in the market shows it, but the longer term view is still very positive. You go out year over year, it was at 25, you're at 440, 445. So and actually the curve kind of flattened out there at 445.
So I guess overall, this just ties back into a global picture where China is generally slower in terms of growth, and the US, I guess we just don't have that demand there. So broadly, commodities maybe range bound. That's what we could be seeing in some of the trading action.
Yeah, I would be across the whole complex. I would say we're probably still range bound. Base metals look impressive. It may be hard without really strong further fundamental push, say from China or some takeoff in GDP here for it to do much more. I am a little wary of crude oil here in the next month or two as we head into fourth quarter, going into first quarter, if we get into a surplus situation. And natural gas it's been tough with the storage numbers being so strong across globally. So it'll take some winter weather, which will give it a boost up, but I don't see what's going to get a pushing very much higher right now, especially if producers keep pushing out 102 BCF a day here.
I always have to ask, what about those LNG terminals and facilities coming online? Will those drastically impact the natural gas market?
I don't know. I mean, I think the exports here, there's 5 or 6 projects here in the U.S. It's supposed to push to 25 BCF export capacity by the end of the decade. If stuff gets delayed, takes longer than they think. But if that's still on play, it's interesting to see that the curve kind of falls back into like a flattened, backwardated state about the end of the decade here. So, as usual with LNG terminals completion and moving, it's kind of TBD.
Yeah, as always. Hey, it's just interesting to see again that hedge fund position going short. The last time they were short, 2016, which was a bottom for at least gold, I think. But going back to 2011, that was a totally different market back then that I think we're all kind of waiting to see again. So very interesting comments there, Darrell. Thank you for sharing what you're seeing on more of the commodities trading side of things on the commodities trading desk. We will touch base again later next month, to get some updates on what you are seeing. Again, Darrell Fletcher, Managing Director, Commodities at Bannockburn Capital Markets. Darrell, thanks for your time today.